Hey everybody, Dr. Imholt back again. Pissed off about more economic stuff. So as Gen X gets older and we start to look, trying to figure out how to retire, we're looking at like we're gonna have to work until like 2 days before we die because that's about the only way it's gonna work. Why is it that way? We talked yesterday about federal government debt. We talked a little bit about housing prices being this insane multiple of annual income now. Let's look at car loans for a minute. The reason I started looking at car loans, you look at things in the economy that might actually start bringing shit down. Remember back in '08 when the housing market crashed, we had all this sort of all these foreclosures and all these issues going on. Well, what's going on in the car loan industry? So I saw this bit of data, started looking at what kinds of loans are going into delinquency. Well, the housing market, okay, yeah, that's actually kind of getting worse in the last year, but we're still at 1%. That's not, one out of 100. I guess it's not as bad as it was in '08. Home equity line of credit, people, it's kind of staying stable. Student loan debt, hey, delinquencies on student loans are coming down. That's good, right? Auto loan debt, it's going up. Credit card debt, it's 6.8%. Other debt, that's things like medical, all, so let's look at auto loan for a minute. Why are auto loans kind of creeping up like this? 2.3 to 2.7 in a year. Before that, they were down in the low twos, high ones. And this is creeping up. Well, let's look at this chart. Back in 2018, this is all these different lines are just different income levels, but look at the average payment that's being made. 2018 between 4 and 450. Look over here in 2024, you're talking about somewhere between almost 550 and 625. Let's dig a little deeper. Okay, this information comes straight from the Federal Reserve, right? This is not information I went off and said, oh, it's sort of like this, it's sort of like that. Let me throw some numbers around. I went and dug them out of the Federal Reserve. And what the Federal Reserve data does, it's really interesting. It'll convert it to some common dollar amount. So everything you see across this chart has been adjusted to 2024 dollars. So everything you see here is consistent, unless it's months, and those are just months, right? So if you look at amount finance, that's all adjusted. Interest rate is obviously the same. It's an interest rate, it's a percentage. But let's look at this number over here. Average APR from 2010 to 2022. You're talking, sort of in the fives, 5.5. Okay, went down, went up, came down. All of a sudden, we were down in the sort of fours. Now we're back up at like almost 7. 6.98 is the average. But look what else has been going on over time is you used to finance a car for 5 years. Well, now the average is 65 months for a new car. So the average monthly salary in the United States in December 2024, guess what it was? 7,875. Guess whose number that is? Straight from the Federal Reserve. Same people gave me these numbers. So before taxes, the average salary in the United States is $7,875 a month. The average amount financed, average, $38,519 at almost 7% for 5.5 years. That means your payment on a brand new car, $713.37, otherwise known as 9.06% of your pre-tax income. Somebody's going to say, hey, Dr. Imholt, what about a used car? You can save some money. Aren't people smart enough to do that? Because sometimes you just need a fucking car, right? Your car starts to break down. You got to get a new one because it's too expensive to get fixed. You got to have something dependable to get the kids around, the family around, get to work in. Great. Let's go look at used car. Remember that average salary doesn't change, right? This doesn't get better inside the United States. That's all the same. December 2023 averages, the amount financed is 24,081. However, the interest rate's 15.8. Average interest rate, not some extreme value. The average on a used car loan, 15.8. You look at certain types of dealerships, and it's way up there. And I'm not going to call anybody out by name, but if you look at them, they're all over your nightly broadcast or commercials. They come bring a car to your house. Well, those guys are up in the 20s someplace. Sure, they'll finance anybody, but you're looking in the 20s. What's the average term? How long does it take you to pay off that used car? 66 months, 5.5 years. You're going to be making payments on this car. $549.37 or 6.97% of your pre-tax income. Why do I bring all this up? Why is this such a big deal? You got to have a car, right? That's before you've insured the thing or put gas in it. Now, if you couple that with the amount of ludicrous ratio that we're spending for income to housing that we had in the video yet the other day, you're starting to look at why there's no saving going on, right? Who the hell is putting money into anything because you can't really afford to? You're spending on housing, you're spending it on cars, you're spending it on things like groceries, electricity, and after that, that's $8,400 a month. Pretty much blown. What the hell are you going to save, right? Maybe 50, 60 bucks, maybe $100. And if you've got kids, remember, that's an average number. If you got kids, that's $7,475 before taxes. You take out a big chunk for rent or mortgage payments. You take out a big chunk for car payment. You take out insurance. You take out food. You take out water. What's left? Not a whole lot. And then you want to go on vacation once a year. Kids want to go to movies. You want to get out. You want to not actually just sit at home all the time. You actually want to go out and do things. Well, can you afford to? I don't know. But if you look at all these numbers and the interest rates combined with the amount sold, sure, we'll extend it over longer periods of time. What does that mean? This debt isn't just a 4 or 5 year car loan like it used to be, is now extending out to 5.5, 6. I've seen some on trucks that are 72, 84 months, huge amounts of time. Now, think about that for a minute. Are we trying to get into a little bit of debt is a good thing? I heard somebody say it the other day. A little bit of debt is good. Great. Well, are you ever actually going to be out of debt? Or are you just, it's this sort of continuous trap that we've been put into so that we can keep the overall economy healthy because you got to spend money, you got to get out there and you got to do things. Otherwise, businesses don't stay in business. I don't know, but those numbers are getting fucking scary. I hope everybody has a good day. I'm going to do more of these videos. We'll talk to everybody soon.